Hey, Freedom Savers, welcome back. Today I'm going to be doing something a little different. Some of you have asked me why I own certain stocks and what I think of other stocks, so I've decided to do an analysis of some of them and give my reasons for owning them and not owning them. I try to keep things as simple as possible, and that includes analyzing stock investments. You can spend many hours going very in depth with every detail of a company when analyzing it, but this is how I choose to do it as I'm lazy and I want to keep it simple. So, this isn't the best way to do it, but I feel it's a simple way to do my due diligence without spending forever doing it. The one thing I'm not currently taking into consideration is if the stock is at a price that makes it a good deal or not. I'm not doing that because I'm dollar cost averaging into my portfolios and it doesn't really matter what the price is as long as I've determined I want to own the company. So, when determining if I want to add a stock to my portfolio, I look at four primary things. Number one, I look at the long term outlook of the company and its business model. So, I ask myself, will this company be doing this 10, 20, 50 years down the road? Since I'm investing for the long term, I want a company that'll be around for a long time. Number two, I look at growth. I look at its stock price history compared to the market direction and its competitors. Is it growing in value? I'm not really a value investor, but it's important to know that the company you invest in is growing or at least stable. Using the stock price for this isn't the best way to evaluate it, but it does represent growth and is an easy way for me to do this without delving into calculations from the financial filings. Did I mention I like to keep things simple? Number three is financials. Is its revenue and net income growing or stable over the past 4 years? 4 years isn't a long time, but it gives me a recent trend and direction the company is going when it comes to revenue and earnings. Again, keep it simple. And last but not least, the dividend. What's the dividend history, sustainability, and current yield? How long has it paid a dividend? Has it grown the dividend? What's its payout ratio? What's the current yield? So today I'm going to be talking about GOOD, or Gladstone Commercial Corporation. Gladstone Commercial is a small cap company with a market cap of 565 million and it's a REIT. I need to mention a couple things about REITs for those who aren't familiar with them. REITs are real estate investment trusts that own assets related to real estate, like buildings, land, or loans. They trade on the stock exchange like any other stock and are an easy way to invest in real estate without actually going out and buying real estate. REITs have to pay out 90% of their taxable income in order to not pay taxes and pass those taxes on to the shareholders. If you're new to investing in REITs, that may sound like a bad thing, but it's a good thing as the income doesn't get double taxed, once at the corporate level and another time at the shareholder level. Instead, it only gets taxed at the shareholder level. Also, many times people mistakenly think of REITs as very risky as their payout ratio is over 100%, which would indicate they're paying out more in dividends than they're making in earnings. The reason for this is corporations use the payout ratio calculation, dividends divided by earnings, after depreciation, as most of their assets depreciate over time. Depreciation doesn't apply to real estate properties as the value of the property tends to go up or maintain instead of drop. Therefore, with REITs, instead of figuring the payout ratio based on earnings after depreciation, we use FFO or funds from operation, which adds back in the depreciation that was removed from the earnings figure. Or in other words, it's their earnings without depreciation subtracted from it. So let's get into Gladstone Commercial Corporation. Long-term outlook. Gladstone Commercial Corporation invests in industrial and office properties and focuses on net leasing them. Net leasing means the lessee pays part or all of the taxes, insurance, fees, and maintenance on the property in addition to the rent. I feel the long-term outlook for Gladstone's good, as there will always be a need for industrial and office properties. Growth. Gladstone Commercial's stock value hasn't had a lot of growth over the past 10 to 15 years, but it is at a stable amount. Its price is at the same amount it was in 2006. It dropped dramatically during 2008 and 2009 recession to only $7, but quickly recovered over 18 in 2010. Since investors are looking for income from the stock and not growth, I believe a flat to stable stock price over the years is fully acceptable. The quick recovery after the recession is a big plus for me as well. Financials. Gladstone Commercial's revenue and net income have increased year over year for the past 4 years. Their overall debt is about 62% of their assets, which is an acceptable amount for me. It is probably a bit high, but companies leverage debt all the time, and I'm always happy to see the debt level lower than the assets anyway. Their payout ratio, figured properly with FFO, is 94 to 97%, which being over 90% is normal for a REIT. Last year, they reported paying $1.50 per share in dividends with $1.54 in FFO. I got that information straight from their 2017 annual 10K filing. So the yield is covered by the earnings. And lastly, the dividend. Gladstone Commercial has paid a monthly dividend since 2005, even through the 2008 and 2009 recession, which hit real estate the hardest. Their stock price dropped dramatically during this time period, so it's impressive that they continue paying that dividend throughout. They have not increased the dividend since 2008, but they also have never decreased it or missed a payment. The CEO is very proud of its consistent dividend payments and brags about it, which is a good sign that they'll continue to do it in the future. The current dividend yield is 7.69%, which is very high compared to the average for REITs, which is between 4 and 4.36%. So, taking all of this into account, I feel Gladstone Commercial Corporation is a good investment, and that's why I own it in both my Roth IRA and my taxable M1 finance portfolios. I hope you enjoyed this analysis, and let me know if you want to see more. I currently plan on doing this for many more of my stocks. Alright guys, thanks for watching. I appreciate it. Be sure to hit that subscribe button down below, and if you liked the video, hit that like button for me. If you want to hear any specific type of information, anything that you're interested in, you have any questions, just drop me a comment down below. Let me know what you think. Let me know your opinions on this video or any other video I've made. And if you know anyone else that might be interested in this video, please be sure to share it on your social media and share the knowledge. Thanks guys.